Think about the food on your plate. Much of it was protected by highly advanced, multi-million-dollar chemical formulas discovered by the world's largest science conglomerates. But here is the catch. Those global giants didn't actually manufacture those chemicals. Instead, they handed over their most closely guarded, top-secret intellectual property to a single, silent partner in India. A partner whose name the average consumer has never heard. This is the story of PI Industries, a company that has quietly turned absolute trust into a multi-billion-dollar business model. How did a silent player become so irreplaceable that the giants of global agriculture literally cannot survive without them? To understand this invisible giant, we must first look at who they really are and how they operate behind the scenes. PI Industries is not your average generic chemical manufacturer. While most competitors focus on copying old, off-patent formulas and selling them cheaply, PI operates as a premier custom synthesis and manufacturing partner, or CSM. They are the high-tech laboratory and factory for global life science innovators. When a global giant invents a groundbreaking new molecule, PI is the one that figures out how to actually mass produce it safely and cost-effectively. Today, this high-value export business makes up roughly 80% of PI's revenue. And their greatest selling point? A flawless 100% IP compliance record. In an industry historically plagued by patent disputes and copycats, PI has built an unbreakable fortress of absolute confidentiality. But this global powerhouse didn't start at the top. Its remarkable journey began with a completely different business model over 80 years ago. The history of PI Industries is defined by the art of the perfect corporate pivot. Founded in 1946 as Mewar Oil Mills in Udaipur, Rajasthan, the company originally crushed oil seeds and processed minerals. Realizing the massive potential of a newly independent India's agricultural needs, they pivoted in 1954 to distribute crop formulations under the famous brand Vegfruit. But their most critical turning point came in the year 2000. Under visionary leadership, they renamed themselves PI Industries and made a radical choice. They systematically divested their profitable but non-core metering and polymer divisions to double down entirely on specialty chemistry. Today, they are pivoting once again, scaling their trusted CSM model into the highly complex world of pharma and biotechnology. This relentless focus on stripping away distractions is what allowed them to build their highly profitable proprietary business engine. So how does this engine actually make money? It all comes down to the custom synthesis model. When a global innovator discovers a new molecule, scaling it up from laboratory grams to industrial tons is a logistical nightmare. That's where PI steps in. First, PI's scientists redesign the chemical recipe to ensure it can be safely and cleanly manufactured at scale. Next, they test it in kilo labs and pilot facilities, verifying process safety and chemical kinetics. Finally, the molecule is manufactured in automated, state-of-the-art multi-product plants. Because these operations are backed by long-term take-or-pay contracts, PI doesn't carry the risk of crop failures or generic price wars. They are paid strictly for their advanced execution. This process is incredibly efficient. But what truly stops these massive global clients from taking their formulas to a cheaper competitor? The secret is PI's trust currency moat. In specialty chemistry, switching suppliers is incredibly difficult. If a client wants to change partners, they must rewrite global regulatory filings, run multi-year environmental audits, and risk leaking their proprietary designs. This process takes up to 3 years, creating massive switching costs. But PI's greatest competitive advantage is their strict policy. They never manufacture generic versions of their clients' patented discoveries. While other companies copy their partners' formulas to sell on the side, PI honors its agreements completely. Global innovators share their multi-million-dollar secrets, knowing their intellectual property is perfectly safe behind PI's shield. This unbreakable trust has translated directly into one of the most consistent, compounding stories on the modern financial books. The numbers behind PI's execution tell an incredible story of compounding growth. Back in fiscal year 2012, PI was a solid player with roughly 880 crores in revenue. By 2018, that figure grew to over 2,200 crores. By 2024, it peaked at an astronomical 7,370 crores. Even during the severe global agrochemical downturn of 2026, PI maintained high financial resilience, consolidating at over 6,700 crores. More importantly, their EBITDA margins have consistently remained above 25%. Because of their contract-backed model and zero-debt balance sheet, PI has remained a highly profitable, self-sustaining financial machine. While internal execution has been flawless, a massive geopolitical shift is now acting as an incredibly powerful tailwind for their future. Global supply chains are currently undergoing a massive structural reorganization. For decades, the global chemical industry depended heavily on China's massive manufacturing monopoly. But today, global innovators are actively de-risking their supply vectors. Under the China Plus One strategy, companies are searching for alternative, highly secure production hubs, and India is the primary beneficiary. With its strong history of IP safety, highly skilled chemical engineers, and competitive operating cost structures, India is rapidly transforming into the world's custom laboratory. PI Industries, with its established relationships and highly regulated factories, is perfectly positioned to capture this massive wave of outsourced global demand. Yet, even the most powerful global tailwinds cannot completely protect a company from internal operational vulnerabilities. To truly understand PI Industries, we must look at the structural risks they face. Their largest challenge is product concentration. A significant portion of their export revenues is driven by a small number of blockbuster molecules. If one of these key compounds goes off patent or faces sudden generic competition, it could severely impact their top line. Additionally, cyclical global destocking patterns can cause temporary drops in customer demand. To mitigate these threats, PI commercializes 4 to 5 new molecules every single year and relies heavily on flexible, automated factories that can shift production lines in a matter of days to match shifting demands. To systematically de-risk these vulnerabilities, PI is now executing its next grand corporate pivot into a massive new frontier. That new frontier is PI Health Sciences. To reduce their reliance on seasonal agricultural cycles, PI is replicating its highly successful CSM model in the pharmaceutical and biotech industries. By acquiring Theramit Novo Biologics and Archimedes Pharma, PI has established a strong foundation in high-margin pharma intermediates and advanced biologics. This strategic move allows them to utilize their chemical process expertise to scale complex, large-molecule biological compounds. This diversification opens up a massive new growth vector, ensuring that the company's financial engine can continue to compound completely independent of agricultural seasonal patterns. This bold expansion into the future of life sciences perfectly highlights the single core philosophy that defines their entire legacy. Ultimately, PI's entire success blueprint boils down to one fundamental lesson. In business, trust is the ultimate competitive advantage. It isn't always about having the cheapest product, it is about becoming a partner that your competitors cannot afford to lose. By prioritizing intellectual property protection, mastering complex process chemistry, and maintaining disciplined capital allocation, PI evolved from a small regional oil mill into a global innovation powerhouse. Their story is a masterclass in how a company can build an unbreakable moat simply by becoming a trusted, indispensable partner to the world's most innovative giants.